Welcome back, guys, to another episode of Dimitri's Desk. Today is October 2nd. This is episode 16th. And here's what we have in store for today's episode. We're going to take a look and see how BTC reacted after that 17% move we had last week. See where we are now and where we might be heading. We're going to take a look at the alts, as always, IOST, EOS, ETH, and see how they reacted since we had that big drop in BTC. We're also going to cover a little bit about back futures and what I think is going on there with the volumes and how that might affect the price. We got a mixed day today in the market, so let's dive into the charts and see what's going on. All right, let's kick things off with BTC USD daily chart. As you can see, as you might have noticed, I have a 50-day moving average and 200-day moving average, and looks like we closed below the 200-day moving average on a daily for BTC post that move that we had about 17% last week. So we dipped down. It looks like we tested 8K and we've been closing above 8K since then. So this is a lot of kind of a choppy price action that we're getting right now as we're trying to put in a support for BTC to essentially reverse and go higher. So as you can see, we dipped down and we closed below the 200 daily moving average on September 26th, and then we've been moving sideways alongside and trying to break above the 200-day moving average since then, but we haven't had luck on that. Now, last time we had something like this similar. If you actually zoom out and take a look at when the 50-day moving average was above 200 and the price actually went down below the 200 moving average. Last time we had that was back in the day when Bitcoin rallied all the way to 20K, and then we had that huge sell-off that moved the price action all the way down to around 7K, and we overshot to the downside about 35% as we were below that 200-day moving average. Now, it's important to keep in mind as you're looking at this that 50-day moving average is still above the 200, so the bias should be still to the upside. Now, with these type of pullbacks, we get a better deal on our entries. Now, we obviously don't want to front run this, and what we should look for, daily close above 200-day moving average as far as the price goes, and then start picking entries. As of right now, it looks like we're struggling to break that. But we're also holding 8K as the temporary support, so we'll have to see how that performs. All right, let's drill down to a small time frame on BTC USD, and as you can see, we get a little bit of a chop here. We had quite a bit of wedges here. If you decided to trade that, those could be rewarding as well, but you have to be very careful with short stops. As you can see, the wedges that we had here, we did get selling pressure, but the selling pressure overall is slowing down. So we had this drop on 26, and then later on we had another drop on September 30th, which brought us to a new low of around 7,600. There might have been some stops there that were triggered that pushed the price down, but we actually closed higher than that. So it looks like we're up here battling this Fibonacci level, which is 50% on that huge trend that we had. So and of course we have the 200-day moving average here as well that we're battling to see where the price is gonna go. So as of right now, the way BTC looks like I said, we need to wait for a daily close above the 200-day moving average before we can re-engage to the upside and capitalize on that price action. But for the moment being, looks like we're getting that chop. Don't get chopped up in this market before the actual move happens. I've mentioned this before in previous episodes, so be careful. I wouldn't be surprised if we make another move to the downside closer to the 7K before we actually come up above the 200-day moving average and get a solid close there and change the momentum to the upside. So for the moment being, be very careful, watch these indicators and see how they perform going forward. All right, IOST USD on a daily, and last time we talked about it, we had this brutal breakout to the downside that brought us all the way down to 0.37. As you can see, we're moving sideways, and I'm looking forward to see IOST really break this level, which is 0.5144, to really start looking at this as any type of reversal to the upside, but for the moment being, it looks like that's acting as a resistance. Given the RSI indication, we're in heavy oversold territory at the moment. Now, keep in mind the way RSI works, it can stay oversold for quite a bit of time, and the price can move lower. The trigger for RSI really is when it crosses above the oversold to indicate that there's a reversal in momentum. So for the moment being, it looks like IOST is struggling with another resistance level like we've had similar to the 0.7 here, where we were moving sideways and then we dropped off because of the overall market drop. So right now, it will be interesting to see how IOST performs given the market conditions that we have right now in BTC and other alts, and see if we can get a recovery rally for alts and for BTC. This has potential to run up quite a bit given the fact how much we've dropped off. So for the moment being, again, we're moving sideways. I'm looking at this resistance of 0.5, and I'll be watching very closely to see if we can get a daily close above 0.51 to indicate a reversal in this trend. All right, ETH USD on a daily. So it looks like we have this formation here, which it looks like a flag formation as the price action is trying to make higher highs, but usually in this case, when we have a drop off in price and we have this type of formation, it just shows that it is a possibility for further downside before we can re-engage in the upside. So again, I've talked about this before. 200 is a level for me for ETH USD. As long as we're below 200, I'm not looking to re-engage any type of upside price action opportunity. As a matter of fact, I'll be looking for shorts in this wedge channel that we have here. So at the moment, it looks like ETH is struggling as the overall market develops, and we'll have to see how the price action performs out of this wedge, and then if it can break back up to 100 to re-engage in any type of buying opportunity. EOS USD continues to struggle. RSI is showing that we actually crossed on a daily out of that oversold territory. So, but as you can see, as far as price action goes, EOS is well known for having this choppy market condition where we have price just moving sideways, and essentially market makers are having a blast at that. So right now, like I said, I mean, we're below $3. That's pretty brutal for EOS USD. And I mentioned, you know, as long as EOS USD below $5, you know, I wouldn't be looking at re-engaging any type of upside price action. As you can see, prices below the 200-day moving average. You know, things are not looking too good. As a matter of fact, if you take a look at the 50 and 200 for EOS USD, that's not looking good either. We have 50-day moving average below 200, which indicates bearish momentum. The problem here is I'm not looking. The reason I'm not looking to short this is because the opportunity to the downside is very low, and we have to look at the risk-reward ratio before we engage in any type of trades. So that's why I'm not touching this to the short side, and I'm not touching this to the long side, because like I said, you know, the way this looks is that the bearish momentum is in play, and you got to be very careful when picking these bottoms. So for the moment being, EOS USD, this is what it is. It's not convincing me to put on any positions at the moment. All right, and we have interesting development here in CME futures that we've talked about on multiple episodes in the past, as we track this to see how the dealers are positioned in this market, dealers being the sell-side institution that sells this product. So as you can see, we've been talking about how they've been building out the short positions and not offsetting their short positions with the rest of the market to keep their books neutral like they had before. Like I mentioned, you know, they're not going to offset positions if they see an opportunity to make money in a direction that they hold their books. So right now, as you can see, they have built out a pretty significant long position here from the last CME report that we had, and they haven't offset their short position as well. So that has been steady, while the buy positions have become more heavy in their books. So it's interesting to see that, because obviously we have BTC dropping to a level like a 7.6 is relatively cheap. So you can see these type of institutions and traders are hopping in and picking up BTC at the lower prices before we start heading back up. This is a very good indication from their end that they're trying to bet on the market to reverse here in the short term and us heading back up, but also at the same time they're gonna make money on their short position while we fluctuate below that 200-day moving average, like I've explained earlier. So it's interesting to see this development in the CME futures market. Now, this is very different from the backed futures that you've heard of, because backed futures are actually give the ability to settle physical Bitcoin rather than just having a derivative like the CME does. So, important thing about backed, and let's talk about it, right? I see a lot of people talk about the volume that backed has, and you have to keep in mind, right? They just opened their platform up, right? So anytime you have new platforms starting a new product, a financial product, big traders are going to take their time before they're going to dive in and start trading huge volumes, right? We've heard of issues of established exchanges that rolled out some products and had issues where market makers would take advantage of certain loopholes and get ridiculous fills. Like we've recently had that on Kraken, where we had a market maker take advantage of that. We've talked about it on a podcast where we had significant volatility where the market maker was filled at ridiculous prices. Meanwhile, everybody was getting stopped out. And then Binance Futures also was a subject to this similar attack. CZ came out and confirmed that there was an algorithm for the market maker that was taking advantage of certain loopholes. So with all this in mind, you have to understand that no big money is going to jump into a futures product like that right off the bat, right after it's released. Now, it is a very important product, and I think it's overall going to have significant volume down the road as we go through this testing phase and we have traders actually trade these contracts and everything goes smoothly. Once it actually scales, the beauty of backed, what it's supposed to do is it's actually going to provide miners with a great tool to hedge their risk for BTC. So we know miners obviously sit heavy on BTC because they mine it, and they have to offset and pay their bills, right, in fiat. So the problem that we've been facing is that the miners had trouble offsetting these positions efficiently. Now, with the futures market, you can actually see this similar to farmers, right? So farmers, when they're farming, let's say, some kind of agricultural crop, they use futures to actually hedge and lock in a certain rate so they can get paid out and not worry about the volatility in their crops, right? They can put them out of business. So futures essentially are going to do similar things for BTC with backed, right? We're going to have future contracts that are going to be sold by these miners to offset the volatility and actually get fiat while they deliver BTC to the offsetting party. So this is actually going to help out, and this is the reason that a lot of people say that when the new futures platform is released, you have downward pressure on the price. That's the reason, is because you have these miners that are looking to offset their positions that they hold in BTC, which can actually cause a downward pressure on the price as they hop in to hedge that. So that's normal, but really in the bigger scheme of things, it makes the market more efficient for the price discovery. That's really what it's supposed to do. Eventually, we're gonna get a more stable price discovery with backed futures in play, and miners are using it as a great tool to hedge their risk. That's about it for today's episode, guys. Hope you enjoyed. Please leave any comments that you have about the information that you received, and I'll see you guys next week. As always, happy trading.